All right, well, let's officially start. It is now the official start time. So, welcome to today's session. This webinar is titled The Successful Investor. My name is Brian D'Amico. I am also joined by Todd Schaefer. Now, watch this. I'm gonna scare Todd Schaefer. Todd, say hi to everybody.
Hi to everybody.
There's Todd. Todd and I are coaches here at VectorVest, and we coach people on successful investing. And as you can see there, the title of the webinar is How to Buy and Sell Stocks to Consistently Make 15% a Year. And some people might see that in today's market and be like, oh my goodness, how are you still making 15% a year when the market is down 30, 40%? Some of those growth stocks are down even more than that. But on average, the market is down between anywhere from 20 to 35%, depending on what you're doing. How could you be consistently still making 15% a year? Well, it's an average. So our goal is to average that over a longer period of time where you're doubling your money every 5 years. And in a case like this year, we one of the biggest comments we get from our clients is, "Oh my goodness, thank you for teaching me those techniques," because they were able to actually move more into a cash position months and months ago. So if you think about it, they did not lose 30% when the rest of the world did. And that's almost like making 30% because now they are ready to recapitalize when the market takes off again. All right, so that is kind of where we are right now. And in today's webinar, I'm so glad you're here because Todd and I have been teaching this for many, many years here at VectorVest. I've been here for over 20 years. Todd's been here for, I believe, well, I'm not going to get it wrong, 15, 17 plus years. But beyond that, he's got decades worth of experience in the investing world. So you're in the right hands. We're excited that you're here. The information that you're going to see today has changed our lives and the lives of thousands of people that we've worked with over the years. So you're definitely in the right spot. I do want you to write something down though. If even if you don't write it down, I want you to understand this. It's that until you know what we're going to teach you today, like until you know how to take control and make money in the stock market, you're going to be at the mercy of outside forces. And you might be thinking, well, what's an outside force? Well, the Fed, raising or lowering interest rates, that's an outside force. Right now, interest rates are still historically low. So you're not going to make really any money in bonds or CDs. And even if you get dividends, the inflation is more than what most companies are paying on dividends. So you have to find a better way to make money. And you don't want to be at the mercy of the government telling you, when you can get your retirement through things like Social Security. So you want to be the one in control. And my promise to you is that in today's webinar, Todd and I are going to show you how you can safely and steadily grow your portfolio without taking unnecessary risk. Now, you're going to do it in a more prudent manner. Okay. And you're going to get so much more confidence because you're going to know when to buy and when to sell. All right. So, one thing that you can write down is that your system determines your success. And Todd and I are going to show you a system today, and it's going to be broken down into when to buy, what to buy, and when to sell. All right, that's the system that we're going to be looking at today. Like I said, my name is Brian D'Amico. I'm joined by Todd Schaefer. The two of us are going to piggyback today's webinar. We are the senior investing coaches here at VectorVest. We've been here for a very long time. In fact, we're part of a larger team at VectorVest. In case you didn't know, VectorVest is a stock portfolio management company. We don't actually manage your portfolio, but we give you the information that you need to be a successful investor. We've been doing this and educating clients since 1988. And the founder of our company actually created the formulas back in the mid 70s. So we've been around a very long time. We've been through the dot-com bubble and its burst. We've been through the global financial crisis and the burst. We've been through the COVID drop and the drop and the recovery. So we know how to navigate clients and you through these types of events. So I think you're in the right spot today, and I'm confident that everything we're going to show you today will help because it's helped a ton of other people. All right, so let's do this. Let's kick things off, and in about 5 seconds, I'm going to read off some comments to you. If any of these sound familiar, like you are going through one of these things right now, in the chat, just say, "Hey, that's me," or "Yes." Okay, so when people come to us, they're coming to us because they're feeling, you know what, man, my account just feels like it's going nowhere. I'm just spinning my wheels. And in a situation like this year, they're like, man, it's not as, we just heard this in our coaching session today. People come to us and they're like, you know what? It's not as easy as it was 6 to 8 months ago to find good stocks. Like, man, I'm just spinning my wheels. And Femi, first one in, is like, yep, that's me. They say, you know what? I'm fearing now that I'm not going to have enough money. You know, especially over the last 6 to 8 months, they're like, oh my goodness, my portfolio just pulled back and I wasn't prepared. I feel like I'm not going to have enough money. But they say, what I really want to do is I want to consistently grow my account. No matter what goes on in the market, when the market goes down like it's been doing, I want to protect myself. When the market then starts to go back up, I want to be there and take advantage of it. I don't want to sit there and suffer through a downtrend and then spend 2 years recovering just to get back to where I was before. I want to be confident and self-sufficient and be able to provide for my family. And we want to give that to you today because we've helped a lot of other people do it too. So here's the journey for today. For those of you who like to know the journey of the webinar and kind of the agenda of what we're going to do today, here's what it looks like. Todd and I are going to start off by teaching you the exact criteria to use to pick the right stocks. That way you're not sitting there wondering, oh, did I pick the right one? What do I look for? We're going to show you what to look at, or excuse me, what to look for. Then we're going to bring Todd in, and his bread and butter, like one of his many bread and butters. That's a weird saying, right? Let's say one of your bread and butters. So Todd's going to come in and talk about, all right, now that you know what to look for in a stock, Todd's going to teach you how to buy them at the right time. Because there's a right time and a wrong time to buy. And then we'll talk about when to be selling your stocks. That way you can minimize losses and protect your profits. Okay, now what we're going to show you today is not just a back test or a hypothetical situation. It's built on real results that we've gotten and our clients have gotten. Because what we do is we do webinars like this where we teach people like yourself how to be a successful investor. And some people decide to continue to work on going forward. And we follow up with them, 6 months, going forward and say, well, how are things going? Sometimes they reach out to us like Ross and they say, well, here's how I've been doing after I learned what you taught me. And Ross, you'll hear about Ross later on, but basically 6 months after he learned what you're learning today, he went from being haphazard and spending a lot of time investing with getting little results. He made 33% with little trading. Tim didn't know when to sell. He was trading in the dark. And again, 6 months later, he's up about 30%. Kamel almost gave up. Some of you, if you're in the same spot, if you're like, you almost gave up, that's where Kamel was. He's like, I don't know what I'm doing, basically. And he is now managing multiple accounts, from trading accounts to retirement accounts. And in his first year, was up 22%. So if all that sounds good, now's a great time to, if you have a cell phone, turn it off. Just give yourself 1 hour, 1 hour of focused, dedicated time. Okay? Turn off your email, things like that. This webinar is very interactive. Todd and I are going to ask you a bunch of questions throughout the session. That way you get so much more out of it. Now, actually, Todd and I teach a 6-week course on this. But what we did is we got together and we built this webinar for you, and we said, all right, let's take the main points from a 6-week course and put the main points into a 1 hour webinar and teach you as much as we could in 1 hour. But obviously there's only so much we can cover in an hour. So if you did want to learn more and you were interested in doing, let's say, that 6-week course or learning some more, you could ask us. We'll point you in the right direction. All right. We'll say, all right, this is what you do. But we guarantee you're going to learn a lot in today's session. So before we go into section number 1 on how to pick the right stocks, I want to know if you're ready to go. If all that sounds good to you and you're ready to learn how to be a successful investor, let me know, let Todd know. We also have John here. John's on our successful investing team here at VectorVest. We've got a bunch of people here to help you out. In the chat, just type in the word yes that you are ready to go. Perfect. Yes, yes, yes. Awesome. All right. So let's kick things off. We're going to talk about how to pick the right stocks. Right? How to pick the right stocks. There is a right way and a wrong way to choose stocks to buy. And we're going to be talking about a prudent way. We're not going to be talking about day trading or swing trading. We're going to be focusing on a prudent, low stress way to be buying stocks. And here's an example of a stock that you might think is a good buy because they're like, oh man, look at this thing going higher. Let me get in on this thing, and you buy it, and then what happens? Like a lot of times it goes nowhere, or it immediately starts to come down, and you're like, oh my goodness, what just happened? Are the market gods against me? What's going on? So let's talk about the main problems that are actually causing this. Problem number one is you are just buying stocks that were already going down. You're buying stocks that were already going down. Now, what you're looking at here, this is actually that same stock. You remember before I just showed you this part right here that was going up? This is part of a bigger downtrend. And what a lot of people do is they buy stocks, or they've been trained to buy stocks that look like this because they hear about it on TV, or an advisor says, hey, let's get into this thing and ride it all the way back up. For now, just understand this concept. One of Newton's laws, a body in motion tends to stay in motion. This was in motion going down. If you have been buying stocks that were going down, they typically continue to fall after that. Problem number two is that you might just be buying just for the dividend. Now, if you're focusing just on a stock if you're just focusing on the dividend, let's say if you try to make a 3% yield on a stock, if you let that stock drop 20, 30, 40%, you're never going to consistently outperform the market. Right? You're never going to outperform the market, period, whether it be consistently or a year-by-year basis. Right? You can't make that trade-off. And when Todd and I coach our clients every week, we frequently hear people say, should I sell this stock? And we say, well, based on the rules that we teach, this is something you probably should have weeded from your portfolio. And they say, well, it pays a nice dividend. Well, again, if you try to get 3%, but you take a 30% hit, that's not a good trade-off. This stock actually paid an 11% yield and it dropped 60%. That is not a good trade-off. Now, problem number three is you might just buy for the company name. And when you got into investing, maybe you didn't know everything about the market. So what'd you do? You bought the Home Depots, you bought the McDonald's, Disney, whatever, right? What you're looking at here is Windstream. When I moved into my house here in North Carolina, they provided phone and internet. And you might be like, oh, well, that's a big company. I like their service. And you just buy shares of it. That might be how your investing plan. But just because a company's well known doesn't mean it's the right stock for you to own, especially at that time. Okay? But the real problem is you didn't have any buying criteria. And if you don't have any buying criteria, you're always going to wonder, what should I be looking for? And if you don't know what to look for, the market's going to dump a ton of information for you to look at. And you could spend hours upon hours looking through information. And you're always still left wondering, did I pick the right one? And I have a picture of pineapples there because basically well, let me tell you a story. I was walking around Walmart with my wife, and she's like, hey, why don't you go pick out a pineapple? And I go pick out a pineapple from that big bin, right? You know how they have all the fruit, watermelons and pineapples and whatever in the bin. I pick one up. I'm like, oh, this one's good. And then she's like, no, this isn't a good pineapple. And apparently you got to sniff the bottom or something. And I was like, I thought I picked a good one. And she's like, no, you didn't. So I did not have the right buying criteria. A key thing is, if that pineapple tasted bad, I would not have blamed my pineapple picking skills. I would have said there was, something else wrong. Maybe it got damaged in transit or whatever. We do the same thing with our stocks. If we have a losing stock trade, we don't typically look back at ourselves and say, did I pick the right stock? We blame other things. So what we need to do is have the right buying criteria up front. That way we know we picked a good one. And then, that trade might not work out. We might lose money on it, but at least we know we picked a good stock. Because if you don't have the right buying criteria, you know what it causes? You could be holding on to bad trades too long because you say to yourself, you know what? I can't be wrong. This was a good pineapple. There's nothing wrong with it. This was a good stock. It'll come back. Like, you don't want to admit that you picked a bad stock. So let's go through the three criteria that you should use to pick the right stocks. There's three of them, so draw out a little triangle on your piece of paper there. Earnings, safety, and trend. Those are the three things. We're going to write it down on your piece of paper, and then we're going to go through examples by looking at stock charts. And then I'm going to test you. So I hope you're ready to be tested. Earnings. There's two things we want you to be looking for when it comes to earnings. First, earnings to be rising. We call earnings the engine. Just remember that. There's two E's. Earnings is the engine that drives stock prices higher. So if earnings are rising and positive, that's ideal. Right? Now, yes, you might think, well, if they're rising, but they're just getting less and less negative. Yeah, that's okay, but we want you to start being picky, and be picky by picking stocks that have rising earnings that's also positive. Now, when it comes to safety, how do you get safety? Well, to get safety, you look back and you say, well, how has it performed throughout time? So we start by looking at a 1-year chart, but then we expand it out to like 5 years, and you can even go 10 years. And you're going to be looking at things like the price direction, the price volatility, what has it done over that longer period of time? You're also going to be looking at its earnings. Has it been steadily growing its earnings, not just over the last quarter, but over the last year, 5 years? And then ideally, it would be undervalued, because here at VectorVest, one part of our mantra is to buy safe, undervalued stocks rising in price. The undervalued piece is there because a stock's price and its value always meet. It might not meet the next day, but over time, price goes to meet value. That's typically what happens. So if price is under the value, there's that upwards pressure on the stock price to go up and meet its value. And then when it comes to the stock's price trend, you want it to be smooth and steady, going up. And the way that you know that it's going up is that it's hitting higher highs. All right, so let's take a look. Here's a stock chart of ideally what we're going to be looking for. Now, to save time, like I said, we try to get as much as we can into a 1-hour session. Typically, we start with a 1-year chart and then we go out to 5 years. We're going to jump right to a 5-year chart in our webinars today, in our webinar today. In this chart, we're looking for a smooth and steady bottom left to upper right pattern as possible. Whether you're looking at a 1-year chart or a 5-year chart, we're still going to favor that. So if I get my pen out, so we're going to be looking as much as possible for this stock to be going bottom left to upper right. And you notice it kind of goes above the line, below it, above it, below it, but it's kind of hugging that line. If you're looking at a stock chart, whether it be a stock in your portfolio or a stock that you're considering, and it does something like this, that's probably one of those things that you can't sleep well at night, right? One of the things that we teach in that full course that I mentioned is that you want to buy stocks that give you a sleep at night factor. Where if picture this, you close your eyes, you put your head on your pillow, and you don't have to worry about the stocks in your portfolio. That even if the market falls the next day, you have pretty good confidence that the stocks that you own, while they might come down, they're not going to drop off the face of the earth. You want a sleep at night stock to get that, where you can have a sense of calm. And part of also what is going to help with that is where you set your stops, which we'll talk about in the third section today. So we want smooth and steady rising prices. And if you think about this, if we break this into, just picture that as being 5 equal segments for 5 years. The stock is higher each 5-year segment. Not that you're going to hold the stock for a full year. I mean, you could, but if you have confidence that a stock in the past has continued to go higher year after year, it gives you the confidence that, all right, well, if I buy it today, there's going to be like an upwards pressure over time. Okay? Now, the second part is the engine. What's going to push that stock price higher over time? Earnings. Now, here at VectorVest, we have a proprietary formula for earnings. It's not just a quarter over quarter earnings. This is what we call like a flashlight into the future, where it's a 12-month forecast on you can picture it as being, what are earnings going to be like a year from now? And in the chat, just let me and my team know, yes, if you currently use VectorVest, no, if you don't, and you're just kind of seeing this for the first time on the VectorVest chart. So because you can see that up here where it says VectorVest graph. So just like just a quick yes or no. Like yes, you use it. No, you don't. It's okay if you say no. If you want to try out VectorVest and use the software, let me know at the end. Well, I think VectorVest still has like a 99-cent trial or some cheap trial that you can get for a month, so you could test drive it if you wanted to. All right, so I'm seeing a bunch of yeses. I see a few nos coming through the chat. Well, even if you type in no and you choose to use something other than VectorVest, you're still going to want to look for the earnings to be rising. Right? It might take you a little bit longer to go through reports on like Yahoo Finance or Google Finance or through your broker. I love VectorVest because I just have to pull up EPS and look for this, the blue line to be going higher. All right. When you have these two things working for you, price and earnings, it's going to give you some more confidence that that stock's going to go up over time. And if you think back to Windstream, I use this as an example because even though it was from several years ago, it was a real example from a real human being, just like you. His name is Steve. And he came to one of our coaching sessions. And this one example highlights so many teaching points. So I think it's great to just continue to use the same example. That way I don't have to keep flipping from one stock to another stock to another stock. We'll just use one stock. So when Steve came to us, he's like, what do you think about Windstream? I just bought it 2 days ago. And if you look down here, 2 days prior is that last green light. And I think we've all been there, right? Where you buy a stock on the last green light and it just does nothing but come down. And that's kind of what Steve was thinking. He's like, man, what do you think about Windstream? I just bought it. Well, what did Todd and I do? Well, we sat down with Steve over a webinar like this, and we said, Steve, let's pull up the buying criteria. Remember, let's always go back to that buying criteria. Did you pick a good pineapple? And how do you know you picked a good pineapple? It met the criteria. Here's price, downtrend. Here's earnings, falling. Price over its value. And by the way, VectorVest also calculates value for you, so you don't have to go out and digging around finding it. So we said, Steve, this meets none of the criteria, and the decision's up to you. But he said, hold on, never mind, I'm selling it now. Right? So hey, the decision was his, but it was a good thing he did because it fell like 10% in the next couple of weeks, and then it fell like 60 some odd percent over the next several months. And I was just curious. A few years later, like I told you, I've been teaching these techniques for a while. I'm like, how's Windstream doing? Did it come back? And the company went bankrupt. It was at 20 cents. So imagine what he was going through. And I think we've all been there at one point where you buy a stock and all these little recoveries are like, oh, now's the time. Now's the time that pineapple's going to turn ripe. But then it doesn't. It goes down. And then you're holding that stock, and each one of these little up waves, you just get so hopeful. And one of the key things is, if you're holding these stocks in your portfolio, staring at them every day, it is a constant reminder that you did something bad, and you tell yourself that you stink at something. That brings down your confidence level. No matter how much you want to say it doesn't, it does. And so we got to get rid of that. And what's a way to get rid of that? Is you avoid it to begin with. All of this would have been avoided if you use the right buying criteria from the beginning. And let me show you a few examples from Todd and I manage a paper portfolio with our clients. And basically every Thursday, and today is Thursday, every Thursday we get together with our clients and we help them implement what you're learning today. Basically people who went through this training, and we help them on a week by week basis implement it going forward. But here's the key point. Forget that it's even EPAM. Just look at the pattern. Rising price, rising earnings. These stocks are all over the place once you know what to look at. This one we got in here, rode it up, and we have certain entry and exit rules that we follow, which we'll talk about in the next 2 sections of today's webinar. But it was like a 26% gain in about 5.5 months. And then we've got a more recent example, petroleum stocks were hot. Well, we got into this back in May. It was a 2-week trade. Now, Todd and I, we don't mean to be a swing trader here, but sometimes it works out like this. It was just a very quick pop. And using our exit rules, which again, we'll talk about in a minute, we closed out of it 11% gain in 2 weeks. But the key is bottom left to upper right when we bought it. Now, it's not as smooth and steady as other stocks, but it was still going bottom left to upper right with rising earnings. All right. And then this is more of an ideal stock. This is like a 10-year chart. Look at this thing, Lowe's. We just talked to our clients today about Lowe's in our coaching session. We had a really good discussion about Lowe's. But this is what you want to look at. So let's zoom in on this period right here, the post-COVID period. After the COVID drop, good stocks rebound. So, we got into a good stock here. 23% gain in 3 months. The stock just kind of went sideways for several months. And we said, all right, well, let's get back into it, but only if the stock is rising again. So it has to be going back up to meet our buying criteria. We know it had good earnings because that was on the other graph. Then we're up 17% over the next, 8 months, 9 months. And we just recently closed out of it. All right. And on a side note, we'll talk about this in the third section. Look at when we got out of it. January. Great time to get out. We locked in profits. The market and this stock continued to move lower. So that's a kind of a hint on how we need to have the right exit rules and why a lot of people like the successful investing techniques. You know when to get in and when to get out. So let's do it here. I'm going to show you 5 charts really quick. Pardon me. And just give me a yes or a no if you think it meets the criteria. I'm going to ask you to be fast. We only give clients 3 seconds to give a yes or a no. All right? Here's one. All right, just very quick yes or no. Yeah. Oh, by the way, this is a 5-year chart. Oh, you guys are fast. All no's. Exactly. All no's. This stock is going down. Earnings is going down. Clear no. If you see something like this, move on. How about this one? 5-year chart. 5-year chart. So if I break this down into, man, I'm really off on my 5-year lines here. Yeah, these are all no's because this is a down swing of about a year and a half. This is what throws a lot of people off. They're like, oh, but earnings is so good. That thing's going to come back. It's got such a great engine. Well, price is the driving force here. So if this is in a year and a half downtrend, you skip it because you know why? You will find this. You'll find stocks that look like this, and you'll wonder, why was I even considering this when there's something like this? All right, bottom left to upper right, rising earnings. Okay, so this is a yes. And I'm just going to go through the next 2 quickly. This one, you can see earnings is falling. Even, look at this, 4 years. 4 years, the stock would have been a yes. But then it fell out of favor. You're not going to be buying stocks that fell out of favor because you're going to find stocks that look like this. Yeah, you guys are fast. My chat box is filling up with yeses. All right. I just want to ask you a quick question. Would you be more or less confident if you used a system? I should, instead of calling it a system, how about a buying criteria like that? Just type in the word more or less. Which one would you be more or less confident if you had buying criteria to select your stocks? Yeah, I'm seeing Brian, Rick, Donald, Kristen, Terry, Harry, Richard, all yeses, or excuse me, mores coming through the chat box. And Lori's like, more, especially with market timing. Exactly. Yeah, more. And that's where Ross was when he came to us. Right? Ross had said that before he came to us and took this training, he had no system. He spent a ton of money on newsletters, and his trading was haphazard because he was going from newsletter to newsletter to newsletter, trying all these different things. And he was basically over trading. But once he learned how to do it the right way, he took this training that you're going through. He actually took that 6-week course that I mentioned a moment ago. He said, you know what, I'm going to focus on this one technique and get good at it. He built a diversified portfolio on safety and earnings. These are his words. He said he focused on safety and earnings. He made 33% in 6 months. He spent 15 to 30 minutes a night now instead of a lot of time, just 15 to 30 minutes a night. And he's got more confidence and he's relaxed. And I want you to understand this. A key part of being a successful investor is your confidence level. And confidence comes from having a system that you know works, right? That you trust. All right. So I want you in this, the first shift you need to make is go from being uncertain about the stocks you pick. Like, you don't want to be thinking, did I pick a good pineapple? I don't know. Is my wife going to get mad at me? To where you're like, you know what? I picked a good stock. It might not work out. The market might turn and the stock might turn, but you know what? I picked a good stock that has a high probability of going up over time. The way you pick your stocks is one part of your system, and it's needed to help you average that 15% per year or higher over time. All right. So now that you know what stocks you want to be buying, you've got to know how to buy them at the right time. Right? Because most people have been taught, that philosophy of, I'm going to just buy any old time. Stocks always go up over time, but that turns into buying hope. So what I'm going to do, my co-coach, Todd Schaefer, I'm going to bring him in because I mentioned it a few times. We have that full course. He spends like an hour going through not just like the daily signals. He gives you a bigger picture of like the market phases. So this is like his bread and butter, teaching about market timing. So he boiled it down to give you the key points that you need to walk away from in today's webinar. So I'm going to bring Todd in so he could show you how to be buying these stocks at the right time. So Mr. Schaefer, are you there, my friend?
It's my wheelhouse.
Ooh, wheelhouse. See, earlier today during our coaching session, Todd, we were talking about food. Todd brought up brownies. I brought up Dairy Queen. So I just could not get food out of my head. So I'm bread and butter.
Well, Lori's all over this topic. She commented, especially with market timing. So let's talk about timing the market, because now that you know what stocks you want to buy, you've got to know how to buy them at the right time. Most people have been taught that you can buy anytime. Well, unfortunately, I'm here to tell you that any time includes the wrong time. So instead of just buying at any time, you can buy at the right time and steadily grow your portfolio using the strategies we're about to show you. So we all know that the market has up and down cycles, right? It's always cycling up and down. And what's been so tough recently in this market, of course, is market's been downtrending since it peaked in November. And you're trying to buy stocks long in that kind of market cycle. Well, that's the wrong time, right? So the market has been up and down historically, and it seems like every time you get in, the market seems to reverse. And that sets you up for this roller coaster ride, particularly if you buy into the idea that once you buy a stock, you should just hang on to it forever, right? So when you're not able to buy at the right time, it seems like every time you make a step forward, then the roller coaster gives you 3 steps back. And you're watching the equity in your portfolio go through these gyrations. And sometimes the down gyrations are hard to recover from and take quite a bit of time to recover from. And it never seems that the uptrends are reciprocal, right? The uptrends are always long and slogging. So we can do a lot to eliminate some of that roller coaster ride. That roller coaster ride then leaves you second guessing your choices on, should I get in? Should I wait? You're never sure what's likely to happen next. And by the way, you can never be sure. But what's the underlying problem causing your stocks that you're buying to drop? Well, the first problem is you might have just bought a bad stock, right? We talked about this quite a bit a moment ago, but it's worth repeating. One problem for a lot of people is the stock itself. It was already in a downtrend. Maybe it had a lot of volatility. Its earnings were dropping. It was just a bad stock. Picking a bad stock is one reason why the stock you buy goes down after you buy it, right? So that's problem number one. Problem number two is that you can get bad advice. And I'll put incorrect advice in there with bad advice, right? Maybe you weren't confident in your own ability, right, to find stocks. So you turn to the gurus on TV or some publication, a newsletter, maybe, right? Maybe a friend, or heaven forbid, your brother-in-law. Right? I'm not saying advisors are bad, right? Most of them, I'm hoping, have the best of intentions of helping you, right? But a lot of stock advisors are following the same philosophy that they've been taught, which is the industry wisdom, is that it's okay to buy stocks at any time. It's always a good time to buy. So whenever you get their advice, most of the people teach it's always a good time to buy. And so there you are, setting yourself up for that particular point of failure. So it's not, again, that they have evil intentions, right? They just gave you erroneous advice. Problem number 3 is that some people think they just have bad luck, right? It's kind of like the Hogan's Hero. Remember Colonel Klink from Hogan's Heroes, right? They always, whenever he made a decision, everyone always did the opposite thing because he was always going to be wrong, right? So a lot of people think, they're just kind of cursed. And of course, the stock went down because as soon as I bought it, then the market gods moved against me. And of course, it went down. Right. So you get into a trade thinking that bad things are going to happen. And guess what? Anybody who's, if you studied performance psychology at all, typically bad things happen when you expect them to happen. Right. So we do a lot of things, even subconsciously, to bring about those bad results. So you think bad things are going to happen and you start to make emotional and bad decisions, which of course brings about that very bad luck. And by the way, you can sometimes have bad luck, right? There are black swan events that happen, right? Outlier events that need to be included in our thinking, right? So the real problem through these struggles, right? You got in at a bad time. Most of the time it's bad timing. And all you have to do is go back and look at some of your historical trades. Even when the market goes up and down, we can still get in at the right time with good signals. Right? We need a way to identify good market periods, something besides how you feel on any given day because of the headlines you read or the narrative you heard on talk television. So you got to have good entry signals. And when you do this right, you'll have clear entry signals to get into the market and into your stock. So this is implying now a systematic approach, right? One that takes us out of our emotional selves and starts making this an empirical exercise. So there are 3 keys to buy at the right time. The first is that the market itself has to be an uptrend. So the underlying principle here is if the broad market is rising, then by definition, the majority of stocks that are in the market should be rising. It's the old saying, a rising tide lifts all boats, right? Well, it happens in the stock market too. So if you're buying a stock and hoping that it's going to go up in price and the broad market is going up in price, you put the probabilities or the likelihood of success in your favor. That's why when you're buying stocks in a falling market, you're working against the odds. You're swimming upstream. You're going against the flow. And the results can be disastrous. And if you've been trading stocks long in the most recent market period, right, this year, then it's been a struggle. So here's an example of what can happen to you when you continue to buy during down market turns. This is Rob. He wrote us and he said he retired in 2005. We're coming into the global financial crisis, right? And in the severest of downturns, he had an advisor who was helping him manage his money and basically said, well, let's just ride it out, right? Because you can't time the market. And as soon as you buy or as soon as you sell out, that'll be the bottom of the market. So basically, he continues to buy and sell stocks throughout the downturn and ends up losing 40% in his portfolio. 40% of his retirement, right? So that starts giving you worries about going back to work at Walmart, right? So you don't want to put your retirement in jeopardy. So here's a look at the 20 years of stock market action, right? And this is 2008, right here in the middle, right? The global financial crisis. The point I want to make here is that it doesn't have to be a financial crisis for you to lose money, right? There are trends in the market. There are long-term trends. There are short-term trends. And what you need to be doing is have a mentality of, I don't care. It'd be nice if I could, but I don't have to try to nail the bottom and I don't have to nail the very top. Now we have in history, but the success is not required on nailing the top. You just need to get the meat of the move, right? We're not worried about being 100% right? So what you need is a signal that tells you, hey, the market's going up right now and it's okay to buy in, right? So it's okay to buy in these up days in these uptrends. And of course, we take different directions based on your objectives and your temperament as an investor. Well, we also need a signal that says, hey, dummy, stop buying. Right? You're closer to the end of this thing than you are at the beginning. And certainly, if it's rolled over and it started down, then I should have a signal that tells me that I should stop buying. So here we zoom into that period that drove a lot of us crazy, right? Again, we have the up and down cycles of the market on both the short and the long-term trends, right? And you still only want to buy in uptrends. So people who don't use a tool like we do here at VectorVest are stuck using things like moving averages. But when the market action is sharp, right, they can be slow to react, and it doesn't tell you or inform you on current trend on a day-by-day basis and whether that's strengthening or weakening, right? This is what we do here. We're looking here at signals given by a tool called VectorVest. And as you see on the graph here, these little green arrows are what we call green lights. Anytime we get a green light, it's telling us, hey, market's in an uptrend. It's time to consider buying stocks. That's what you need. You need a systematic way to know that the market is trending up and that it's a good time to buy and that uptrend is continuing. So take a look at what you have here. Green arrows during the uptrend, no green arrows during the downtrend, and certainly no green arrows during the big down over here, right? Maybe one or two that sneak in every once in a while, but for the most part, you don't see a lot of green, and you're not going to blow up the account by one or two signals that don't play out. So you see green on upturns, which is putting the probability on your side, and that's the biggest one. The market's trend and going with the market's trend. Accelerate when the trend is up, get out of the gas when the market stops going up, and then get on the brakes when the market starts going down. So the second key is you got to make sure that the market's in uptrend, right? You need to make sure that the stock is already doing what you want it to do before you buy it, and then we'll buy it when the stock and the market are rising together. So we start applying this back to that Windstream trade, right? Again, a great example of mistake people make. The stock's clearly in a downtrend, and we define downtrend as a series of lower highs and lower lows. So you can see what Steve did. He bought it when it was hitting the trend line, right? If I connected those lows or the highs, right, it just came back to trend line. It's still in downtrend. Now, it did take out the prior swing high, I'll give you that, right? But you don't want to buy the stock when it's in downtrend because typically they continue to fall. So instead, you want to make sure that the stock is in an uptrend. For that, you see a series of higher highs and higher lows over time. And when you see that, it's also easier to manage because it's easier to understand when the uptrend stops. So how would you know? Thinking to myself, right? You would stop seeing the price moving to higher highs and higher lows. Maybe it puts in a lower high or puts in a lower low, right? It's telling you, hey, the uptrend is under pressure. And particularly if I get a lower high and a lower low, the trend by definition has reversed. All right. So number one is that you want the market to be in an uptrend. And number two is you want the stock to be in an uptrend. And you want clear ways to identify that, right? We like to have a trigger, kind of a binary signal that's either on or it's off. All right. Key number three is you want to make sure that the stock is clear of resistance. If not, there's a good chance that your stock will fall right back down as soon as it reaches that resistance level. So this thing called support and resistance doesn't come in 100% of the trades you do, but when you see it, you've got to know what you're seeing so you can avoid the trap, right? We want stocks to be doing just what you see in this picture, busting up through the resistance of prior price action so they can continue to move higher. Well, that implies that price often stalls when it gets to those prior highs. If the price doesn't break through the ceiling, it tends to hit the ceiling and come back down, like hitting your head on the ceiling and falling, right? So we'll take a look at a couple examples here, but you can see CNC, it marches nicely up the page all the way to the right-hand side of the graph, right? Has a bit of a sell-off, then it starts to rebound. And so what do some people do? Well, they buy the dip, right? And they end up buying it right when it's back at resistance. So if you're unfamiliar with the term resistance, think about it this way. All the people who didn't sell back at the prior high are just waiting for it to get back to that level so they can sell it because they're afraid that the trend is over. So there's a lot of selling pressure over here, and it puts downward pressure on the stock's price. What also ends up happening a lot of times is this: the stock moves lower because it can't overcome all that selling pressure, right? And then sometimes those drops can be precipitous. So instead of doing that, let's do this. Let's avoid taking the entry at resistance, right? We have nice price action, we have nice earnings action. Here it had a sell-off, but during that time, a lot of stocks sold off in late 2018. So the stock starts to come back up. It started to break above an area of resistance. You can be even more prudent and wait for a full candle above, right? Or a couple candles above. But it's able to overcome all the unhappy people. And when that happens, now you're off to the races, right? Clear sailing right up until what happens again? Price goes up, gets a little overextended, price congests because people aren't confident that the price can go higher. So we dice around there a little bit, retest resistance, and march on to the next high, where we repeat the process. So we can see that those are recurring phenomena. The idea is we can avoid buying into that higher risk entry by just waiting for a couple bars. Once it breaks through, then it's a much higher probability trade. All right. So we just looked at 3 ways to buy at the right time. Market's in an uptrend, the stock's in an uptrend, and the stock is free of resistance. So we always like to personalize this. And you remember Kamel from earlier? He said he had no discipline in his trading. He'd buy falling stocks in down markets. And by the way, parenthetically, this isn't what he said, but often people tell us we're doing that because you want a better price point, right? You want to buy on a discount. Well, buying falling stocks in down markets on down days is a way to get a lower price. Problem is that the price is usually moving lower from there. And then you have to hope and pray for them to come back, right? So you're getting off on the wrong foot, as was Kamel. So he eventually started to question his ability to continue investing, right? How much losing can you stack up? But once he learned the successful investor system, like we've been telling you about today, he began to turn things around, right? So the nice thing is he was chatty, right? He shared with us his experience as he was going through the process. And he wrote to us and he said he had increased his confidence level with the coursework. And when he attended our weekly coaching, he would send us weekly updates throughout the year on his portfolios. So he actually takes pictures, screenshots of his computer monitor and sends them to us. So here we zoomed in on a portfolio he just called portfolio number 1, which was up over 22% in the previous year. Right? And look at the steady climb on the equity curve. He has another portfolio which is up over 43% since he started it. He sent us the summary page from the portfolio manager of the trading he did in that portfolio. He only did 21 trades, right? He had a 52% winning trade percentage. So you don't have to win all the time. He was only winning half the time to be successful, right? And you don't have to be hitting home runs every time you have a winner. So you can be a 50-50 trader when you have a good system. The other cool thing Kamel said is that his emotions are minimal and he's eliminated his stupid actions because this has now become an intellectual exercise, right? He finds portfolio management less stressful, more rewarding, and dare I say, probably even fun. But all of it's due to using a system that we've been talking about today, right? And so hopefully this gives you some impetus to make that strategic shift, right? One of my jobs today as a coach is to guide you through a few important shifts in your investing and in your thinking. So instead of choosing a buy any old time and then hope and pray for success, right? Suffering through the roller coaster ride, you need to use a system like our successful investor system to start buying at the right time. And you can start to see that steady climb in your portfolio puts you in control, right? And that control is a big piece of your financial health and wealth, right? So that's how you can average this 15% a year, right? Beat the market by having a consistent rules-based approach to managing your trades. All right, so now we need to turn the corner and talk about, all right, I have these stocks, I bought them at the right time, but you said, well, I'm not holding them forever, so when should I be selling them? Well, Brian, tell us what we should do.
Yeah, that was amazing stuff, Todd. That knowing that market direction and the when to buy, some people don't realize how important it really is. Uh, Even though everybody tends to focus on the when to sell, that when to buy, as you illustrated, is super important. So I usually like to remind people at this point, if you're like sitting down, kind of just refocus. I know some people might have looked away at your email or something. Focus back, because this is the when to sell piece. A lot of people say this is the most important thing that they need to know. And because now that you know the stocks to buy, and as Todd showed, when to buy them, perhaps the most important thing is to know how to know when to sell them. And this is, like I said, this is the thing that most investors have the most trouble with. And why is that? I mean, let's look at this example. I mean, you see a stock that you like, right? As we showed you, this stock is in an uptrend. And what did Todd just teach you? Stock is at resistance. So don't buy it at resistance. Wait for it to go above resistance. So you buy it and it goes up and you have a winner. And you're like, yes. But then you don't know when to sell. And you watch that winner turn to a loser. And then you end up suffering this big loss on that trade because once it becomes that big loser, you end up holding it and you're hoping it'll come back, and it eventually falls so far you say something like, well, you know what, I might as well just hold it now. If you suffer those huge losses, it is so hard to recover from them. Just do the math. If you lose 50% on a trade, that stock actually has to go up 100% from where it is to get back to break even. And if you've got these things in your portfolio, and if you're suffering from these things, you start to feel like a failure. And just like Kamel said, he felt like a failure is about to leave the market. So what we need to do is fix that. Right? The way that we fix that is you need to know your exits. You need to know your exits right from the beginning, just like when you get on a plane. They tell you how to get off the plane before it even moves. Now, in the full course that we teach, we actually have several selling rules that are built into that course. We spend about like over an hour talking about all the situations. That way you have it's a rules-based system for everything. But in the time that we have today, let me give you the two big ones that Todd and I use probably more than any other rule that we teach, that we think that if you walk away from today's webinar, these will help you immediately. First, you want to make sure that you set your line in the sand. Right? And if the stock hits your line in the sand, you get out of it. No questions asked. You don't say, well, let me give it one more day. No questions asked. You got to have that line in the sand. And then second, one of the 4 rules that we teach in the full course to help you lock in your profits is to never give back more than half your gains. Let's take a look at using these 2 rules using a couple of trades from that paper portfolio that I told you about earlier. Now, this first one here, UVE, this is a stock that we traded in that paper portfolio. And I mean, look at it. It looked good, right? The stock was going up in price, earnings was going up, and we're looking at this trade, and was this third? Third, it was at resistance, and it had a full candle above resistance. So we're like, oh my goodness, this just seems like a no-brainer. We're already counting our money that we're going to make on this trade. Well, after we got in, before I tell you about what happened after we got in, let's talk. You need to plan out the trade from the very beginning. So when you're planning out the trade, what was the first thing that I mentioned? Set your line in the sand. And you might be thinking, all right, well, Brian, where do I set my line in the sand? What Todd and I do here at VectorVest, VectorVest calculates a stop price. And we use that stop price, which is based on a 13-week moving average, adjusted for the fundamentals of the company. You set that right from the very beginning of the trade. And it just happened to, we would do it down here. And this one actually worked out well. It was below level of support too. So once you do that, once you set your line in the sand, you're going to figure out your entry. Like I'm going to enter it up here. You enter the trade, and we actually got into the trade, and it started to go for us for a couple of days, but then it started to come against us. We're like, oh man, don't worry, we got plenty of room. But then in one day, boom, it falls. You don't give it another day. You don't say, well, let me hold on to it. It's a good stock. You exit the trade. And when you have your rules in place, you can do this unemotionally. You got to be unemotional. And you can see we took a 10% loss on this trade, almost 11%. But a 10% loss is a lot better than a 20, 30, 40% loss. Right? Having a line in the sand will protect you from suffering those large losses, which can kill your portfolio. Well, let's look at the second one, which is never give back more than half your gains. This stock here, IIN, we actually traded a couple of times during this year, the year that I'm showing here. The stock was taken off, earnings was going up, and we entered here. Now, this was a quick trade. You could see here, it was only, at the time, it was only 2 weeks. So you can see we walked away with a 17% gain. Why did we exit? Well, we gave back half of our gains, which means we must have been up 34% at the peak. And it dropped down, and we walked away with a 17% gain. Well, and you might think, well, when does this kick in? As soon as you're up 10% or more, then this rule kicks in. So we're up 34%, it pulls back, and then some people are like, oh, well, you sold at the bottom, guys. Good luck. Good job. And then it went higher. Well, sometimes that's going to happen. You can't second guess yourself. You followed your rules, you walked away with a profit, and we said, you know what? All right, well, we'll get back in. Not because people told us to, because the criteria was met. Only when the market and the stock told us it was okay to re-enter. The stock was still in an uptrend. The market was in an uptrend. We entered. Our line in the sand was way down here at the VectorVest stop price, so it gave the stock plenty of room to breathe. We exited with almost a 9% gain, which must have meant we were up about 18%. It pulled back. And, well, you know what happened? People were calling us saying, why did you close that trade? You should give it another day. Remember what happened the last time? Well, it didn't, right? It didn't keep going up. Knowing when to sell allows you to lock in gains and minimize losses. All right. Tim was in that same boat. He's like, you know what? I used to buy and hold. I never knew when to sell. He felt he was trading in the dark. He would hold on. The stocks would never come back. But after he learned this system that you're learning today, and like I said, he actually took that 6-module course that some others have taken. After 6 months, he's on pace to make 30%. Able to make informed decisions. He's actually only placing his stops once a week instead of once a night. Todd and I actually teach in module 4 of the full course that we teach. Actually, module 5. We teach that you could do this in about 15 minutes a night. Right? But Tim said, you know what? I'm going to do it once a week. And look at this. He's sleeping better. Emotionally, he feels like he's got a better ability to know what's happening in the overall market. So you got to make a shift of not knowing when to sell and you suffer large losses to where you know when to sell. You can choose to place trades without knowing when to sell, which leads to trading in the dark. Maybe, like a deer in the headlights. You're like, oh, I'm frozen. I don't know what to do. Or you can set up the trade right away from the beginning and know where to set your stop. So you minimize losses and maximize gains. I mean, this is critical. To be a successful investor, your system must include rules detailing when to sell. All right. And as we said throughout today's webinar, your system determines your success. So here's a quick checklist of your system. I'm going to give you 5 things and just share with me as we go through it. Grade yourself. Either you're going to give yourself a check or an X. Number 1, does your market signal reliably tell you the market's in an uptrend? If you have no signal that you use, that's a definite X. If you, let's say you're a VectorVest subscriber, and VectorVest has multiple signals, but you're jumping from one signal to another, you're not really sticking to one, well, that's still an X, even though VectorVest has got some great signals, as Todd showed. What about number 2? Are you finding safe stocks rising in price with rising earnings? Right? Check or an X. What about this? How long does it take you? Now, some people who, let's say they don't use VectorVest, they might not be buying these stocks, but it takes them 6 hours a day to find it. And what about this one? Do you know how to use stop prices? Well, some people will say, yep, I know how to use stop prices. But then when I ask, are they helping you to protect profits? They say, well, I'm not actually using my stop prices. So that's an X. All right, so in the chat box, tell me and Todd, how many checks do you have? Just grade yourself really quick. Is it 1, 2, 3, 4, or maybe you have 5? Are you 5 out of 5? What did you just learn about your system? I'm going to give you 10 seconds. How many checks do you got? Andrew, you're the first one in. Andrew says, I got 3 out of 5. 3 out of 5 for Andrew. How many checks do you got? While you do that, let me grab a quick drink. Anthony says 2. 2 checks. So while you're typing those in, like, was it Rick says 2. Kristen's like, I got 5 out of 5. And remember, Kristen, I always got to like you because you spell your name with the I-N at the end. So Harry says 2 out of 5. Yeah, so the key is if you don't have 5 out of 5, the key is to get it up to 5 out of 5. That way you have a complete system. Yeah, so that's the third shift, to go from having no system to where you're using a system. And that's where we talked to Rick. I actually had like an hour-long conversation with Rick. He went through this training that you're going through. He did a 6-week course with us. And then I followed up with him after the fact. And I was like, all right, well, how are things going now? Kind of tell me about your journey. And he said, you know what? In the past, I did things on my own. I didn't know when to buy, what to buy, or when to sell. And I used to do mutual funds, but I was just kind of spinning my wheels, kind of right back to where I started. And I just got tired of hoping and having no control. And he said he felt helpless and hopeless. But after taking the training, he's like, you know what? Now I know how to find those stocks. Now I know what to look for. And he was up 11.5% in his first month because he took the course when the market was in a downtrend. But by the time he was finished with the course, the market started to recover and he knew exactly how to attack it and get in and take advantage of it and have a complete system. And he's got confidence that he's in control of his future. So as you've seen today, without the right system, if you don't have a system, you could continue just buying stocks only to see them drop right away. Maybe you'll be like Tim and you feel like you're trading in the dark because you don't really know when to get out of a trade. Maybe you're like Rick or other investors right now who are feeling their accounts going nowhere, or you're not growing your account fast enough. Today, we did outline the system or the basics of a system that you could be using to get your success. All right. When you have that system working for you, you're going to know exactly when is the right time to buy, what stocks to buy, and when to sell them. So that way you've got that confidence. So the obvious question right now is, what do I do next? What's the best way to install this system in my portfolio? I mean, well, you do have a choice. Option number 1 is you can say, great webinar, Brian, great webinar, Todd. I enjoyed it. I'm going to go try it out. But you might be learning by trial and error, and you could be in the same place this time next year, not getting the results that you want. The better option, at least we feel the better option, is you do what Tim did and Kamel did and Rick and Ross, and you 100% commit to learning the system to become a successful, confident investor this year and begin to consistently grow your account. All right, so if you're ready to do that, we've mentioned it several times. We'd love to have you join us in the Successful Investor course. I say it's a 6-week course, but it's a 6-module course. Let's say you purchase it today, you could be done with it by the end of the weekend. But in a few weeks, we're going to start meeting with you every week. So I'll tell you more about that in just a minute. But before I tell you about the course, let me tell you about the outcome you get. This course, you're going to get a complete A to Z system, which shows you how to grow your account and consistently average the 15% per year over time. But we only want people who are dedicated, who take their investing seriously and willing to put time in to learn the system. But if you're not serious about this, or you're not committed to it, or you're just looking for some magic pill to become a millionaire tomorrow, don't do it. Right? We only want serious people who take this as seriously as we do. So let me just map it out for you module by module. In module 1, we feel it's really important to do a strategic game plan with you. You got to begin with the end in mind. We want to align your investing style with the overall targets. And the outcome you get here is clear goals and objectives. That way you know what type of investor you've been and how to course correct. And if you start to get off target, it's going to bring you right back into target. Then module number 2 is when to buy. As I said, Todd can only touch on some of the high level things in today's webinar, some very important things. But in this module 2, he's going to teach you about all the phases, because not every green light is made the same. All right, he's going to teach you about all the different phases of the market and how to react to those different phases. And then in module 3, we're going to talk about what to buy. We're going to teach you how to find those stocks so you don't have to waste hours of your life digging around looking for them. Then in module 4, it's all about when to sell. Right? You got to know exactly when to get out of a trade. That way you can minimize losses if it goes against you, but also lock in profits at the right time. So we're going to teach you that in module 4. Module 5, we're going to set up that game plan for you. We're going to work together, and you're going to see how to size your positions correctly, how to diversify, how to buy the right number of shares, how to manage your risk. We're going to give you a checklist. That way in module 6, you set up your daily routine, or like Tim, you set up your weekly routine, and we're going to take you all the way to the broker where you know how to then place these trades, and that it'll give you that super confidence that you know what you're doing. And by the time we're done, you're going to have that system that we talked about to get steady, consistent gains each year. Now, we did put together a few bonuses for you, but before I tell you about the bonuses, I want to let you know, even though this course is super low priced, like you'll be amazed at the price of this course. It is 100% money back guarantee. I mean, you could go through the entire thing, for the next 6 weeks, go through the whole thing, learn everything we've got to teach you, and then say, you know what? I don't think I learned what I needed to learn. We don't think that's going to happen, but you have a 100% money back guarantee. All right, all we ask is that you do the work, because we know if you do the work, you will see results. All right, so there's no risk to take this course. Now, the bonuses, I heard from some people, they're probably going to jump right to this bonus module, because it talks about how to protect and profit in down markets because of what's going on right now in the market. We've heard from our clients that said that what they learn on how to protect and profit in down markets is the thing that saved their portfolio since November, because they knew what to do and how to protect themselves. And you'll learn that in this bonus module, in addition to module 4, by the way, on when to sell your stocks. Then you'll also learn how to automate your trading plan. That's kind of what Kamel is doing now, where you set things on autopilot. Now, a handful of you will also said you did not have VectorVest. Instead of taking out just a trial from our website, if you choose to purchase this course, we're going to give you, instead of a 30-day trial, we'll give you a 60-day trial of VectorVest. That way you could try it out, see what it's like. I will say this. Going through this course, you will become a successful investor. You're going to learn how to be like a fantastically confident, successful investor going through this course. If you choose to continue to use this tool, I bet it's going to make your life a whole lot easier. It'll speed things up for you, get you better results, but it's up to you. We'll give you access to it during the course, and then after the course, it'll be up to you on whether you want to continue with it or not, but I'm telling you, take the course, you're going to become a successful investor. All right, in addition, Todd and I will meet with you once a week, every Wednesday evening, to help you implement what you were learning this course. We're not just going to say, hey, go watch the videos. We're going to say, all right, let's do the work together. We are going to make sure that you get the results. Now, you got to come to the sessions, right? You got to either come to the sessions or watch the recordings, but we're going to meet with you live for 6 weeks. In addition, we're going to invite you to our coaching class every Thursday. So basically 2 live sessions with me and Todd every week. And in that session, you're going to be alongside other people who have actually finished the course, and they're getting our help on a weekly basis on how to implement what they learned in the course. All right, so that's a huge bonus, because you're also going to see how we manage that paper portfolio on a weekly basis. So it's over $1,900 value. I mean, you get all these things as part of the course. And you might think, well, are you charging the $1,900? Are you charging $1,000? I mean, there's some places out there for the training that you're receiving in this course, they do charge that price. In fact, $495 is what we charge for this course throughout the year. right? With limited bonuses, without any of the live sessions. But we want you to be able to enroll today and start getting results right away. So instead of the $495, I'm going to show you a price here, but then if you choose to buy in the next 15 minutes, you get an additional discount. The special price is $295. But if you order before the end of the webinar, instead of the $295, you get an additional $50 off, and it's $245. I mean, it's an incredibly low price. And remember, it's a 100% money back guarantee. So you get the full course. You get a full year of access to the course. You get the live sessions with us. You get the access to the software, the bonus modules for only $245. Right? You just got to go to vectorvest.com/TSIC. We're going to put that link into the chat. You should be able to click on that link that we just put into the chat for you, and then it'll bring you right to the order page. We asked students who finished the course what they would tell you as somebody who's thinking about taking the course. We said, what would you tell them about the course? And John said, it'll help you make better trades, reduce your losses, and earn more profits with less time. Lucine said, just do it. The benefits are unbelievable on so many levels, financially, emotionally, and psychologically. We actually just had about 45 minute phone call or video conference with Lucine about a month or two ago. And she told us how much the course meant, how much it meant to her. Richie said, I've taken several other investment courses, and this one is among the easiest to implement and stay on track. Terry said, take the course, period. For the amount you are investing, you will more than pay yourself back by either your stock purchase or protecting your principal. And David said, turn off the TV. Don't take advice from friends and take the course. You'll be glad that you did. I mean, if you think about it, well, what's been your gain over the last 12 months? Or what happened to your portfolio over the last 8 months? Have you suffered a 20, 30, 40% drop in your account where you don't have to? I mean, do you want to be like some of the clients who've taken this course and have gotten our help where they did not suffer the pullback in the market that we've seen? Right? If you're not where you want to be, the key question is, do you have a plan to get there? And if you don't have a plan, you're going to continue to do the same old thing, getting the same old results. And how much is it costing you not to do this? I know the answer to the opposite question, which is how much is it costing you to do this? $245, right? I can't answer the question for you on how much it's costing you not to do this, because I don't know how much 20 or 30% loss in your portfolio equaled. It probably was more than $245. If you could have prevented that big of a loss to your portfolio, would that have helped you? Would that have been worth $245 to you? That's a question you need to answer for yourself. All right. Remember, it's a complete money back guarantee. All right. Don wrote us a page-long letter. It was amazing. And he was just going on and on about how much this course changed his life. He said, you know what? I left investing for about 10 years and I decided to get back in. But I went to the message boards and to Reddit. And by going to those sites, he knew how little he knew, or he found out how little he knew. But he took the course and he now has confidence in his ability to find, research, set up his trades, and he knows when to sell. In his first month, he was up 8.5%. All right. He now sees a more financially sound future. All right. So again, vectorvest.com/TSIC. It's only $245 for the next about 15 minutes. In a moment, I'm going to begin our Q&A. But before I do, in the chat box, if you're in, just type I'm in. Just those two words, I'm in. Because Todd and I are super excited to do this with you because we know this will transform your life. Not just financially. We know it'll help you financially, but psychologically and emotionally as well. You're going to feel so much more confident, right? And in control. And if you remember Rick from earlier, I'm like, hey, Rick, do you see how is this going to change your life in the future? And he said, you know what, Brian? It's already changed my life. He was moving across country and he was able to buy a little bit of a bigger house than he had planned on because he now feels so much more in control of his life. Right. Now, if you've already taken this course, by the way, we do have a refresher rate, which you have to call in for. It's a $95 refresher rate because you might have taken this course 2, 3 years ago and you say, you know what, I'd love to get a refresher and go through those 6 live sessions with you. It's only $95 for you. We did send you an email with a special unique link for you. So just check that out or call our team. We'll put the phone number on the screen there or in the chat box. Now, one of the common questions we get is, I don't have a lot of time to do this. I'm working, I got a lot going on. And other people say, well, can I even do this myself? And Carol told us about her story. And she said, my father just passed away. I'm managing his estate and I'm still working. I just don't know if I have time. But I got to do this because my money manager has only made me 1% per year during a bull market. But man, I've never done this before. I'm fearful of doing things wrong. So you can see the tug of war she's facing. No time, but she's got to do it. She's fearful, but she's got to do it. Right? She's like, so she decided to do it. She took the leap. I don't know if it was because of the money back guarantee or what. Right? After taking it, and by the way, she's continues to come to our weekly coaching sessions. She was just there again today. She was just asking us a question today. She's just continually learning. But she said after taking this course, she's no longer afraid. She's now got 60% winning trades. She's outperforming her money manager, and she's got confidence and she's having fun. All right. Again, it's only $245. Go to vectorvest.com/TSIC. Get yourself started today. Todd and I and John, we're going to be here for the next few minutes answering your questions. So if you have a question, type it into the chat box. We will help you out. All right. And I'm looking in the chat box. I see one question I will answer is from Carol, actually a different Carol. It's Carol A. Carol A says, when do the live sessions start? I actually have a calendar for you, Carol. The live sessions will start July 20th. So if you think about that, that gives you about 2 weeks to go through the recorded material. And because you have access to the recorded material right now, like as soon as you order, you'll have access to it. You can go through the training modules, do the homework, take the quizzes, and then write down your questions. And that way on the 20th, you could start coming to those Wednesday sessions with me, Todd, and John, where we will help you and fellow students go through this course module by module. And then on the Thursday following each of those sessions, Todd and I and John, we run a coaching class of people who have pretty much taken this course before. And we're helping them implement on a week by week basis. So you're going to get 2 sessions with us every week. These Thursday sessions are at noon Eastern time, whereas the Wednesday sessions are in the evening, 4:30, after the market closes. Okay. All right. So let me go backwards. I'm seeing questions about the refresher rate. If you are taking this as a refresher, to get that $95 price, you can call 888-658-7638. That's our phone number in the US and Canada. Or we sent you an email, and the email will have a special alumni link in it. Okay? Or you could just send us an email, and that way you can timestamp it and say, hey, I was on the webinar. I'm trying to order and I'd like to get this. But if you just want the $245 rate, just go to vectorvest.com/TSIC. You'll see a page that looks like this. And on this page, you just have to click on Purchase Course Now. All right, when you click on Purchase Course Now, if you're already signed in, it'll probably bring you to the order process. But if you're not signed in, most of you probably have a username and a password with VectorVest, which means all you have to do is click sign in. Sometimes people who already have an existing account with us start filling in all this information down here. This is only if you have if you're brand new to VectorVest, this part down here. All right. If you already have a VectorVest account, go up here to where it says sign in and put your username and password in, and then it'll bring you through the order process. Okay. Only use this stuff down here if you do not have a VectorVest account and you need to create an account with us. All right. And let me show you what the course looks like, and then I'm going to jump to some more questions. Give me a second. I got to log in. All right, there we go. So I have, if I scroll down, I've actually completed the course. So let me show you what it looks like. This is what the course will look like once you sign in. You can see it's broken down module by module, module 1, module 2. And within each module, you're going to see, if I open this up, the presentation. So you see this first one is 55 minutes long. Then there's a homework assignment video. Then there's a test. And this is where it says mastery session. That's where we're going to put the recording of your live mastery sessions that you have with us. So if you order today, you're actually going to see the mastery session that we had with the prior class. And you can kind of hear what it's like to be in a mastery session. And then we'll overwrite this one with yours once yours is done. And if I scroll down, you'll see the 2 bonuses that you get access to: how to protect and profit in down markets. All right. And I see, like Harry is wondering, if do you use contra ETFs or short? We teach about that in this bonus module. All right. And then the recordings of the bonus coaching, those Thursday sessions, will be put right in here. Okay. And then, of course, you have access to all the slides. You can download the slides, and there's checklists and cheat sheets and homework stuff all inside of the resources area. All right, so all you got to do is go to vectorvest.com/TSIC. I saw a few of you had said, I'm in. Like Kristen and Rick and so on, and Robert and Lori's trying to get in. You should get an email from us virtually immediately. And that email will have all the dates and all the times and all the details. So that email should come virtually immediately. All right, so just go to vectorvest.com/TSIC. All right, so I haven't looked fully at all the questions that came in. So Todd, if you happen to see one that you wanted to touch on, or just something I missed, I can bring you back in, and you could fill us in.
All I have to do is find the button so that I can reactivate the microphone. So a lot of the conversation is, we're in this bearish condition, and what are our solutions for bearish markets? And of course, we've talked about already our bonus session. We talk about trading contra ETFs for the down markets, but recognize that even in bear markets, you have bull rallies. So there are still opportunities to buy stocks long. And while it may not be a buy and hold for a 3-year kind of model, you can still buy stocks long and have a couple good market turns a year just playing those uptrends. So let's not just discount, right? Even in this down session, there have been a couple rallies that you could take advantage of and still make some gains in the portfolio, even though they're relatively short-lived, kind of by definition, right?
Hyde said, that's a good point, Todd. Carol says, my link is not working. Should I call? Sign in does not allow me to purchase. That is, I wish I could help you on the call, but I'm not sure what link is not working and how to resolve it. I would say, if you don't mind calling, give our team a call. That way you could actually speak to somebody and confirm that everything's going through. So yeah. Now, Carol, are you referring to a link in an email to get a refresher rate? Or are you just saying that you're trying to go to the link that we put on the screen here and that's not working? And while you answer that, Todd, Rick wanted to know, would this be helpful to find good covered call candidates as well?
We see this course as really foundational to any trading approach that you would take, and that would include options, right? So even when we're trading options, we still want to know what the market direction is. We still want to know which are good candidates, right? Doing what we want them to do, and then select the correct option trade in concert with that analysis, right? So you need a good candidate for the kind of trade you're going to put on for options. So these are kind of core skill sets you really need to have, in our view, to find success across all those different time frames and trading types. So for instance, if you want to swing trade, that's fine. I really see this course as kind of a foundational course. So if you want to swing trade, in my mind, you should already be accomplished at position trading, longer term trading. You should already be able to consistently outperform the market. If you can't, well, then I'd say, no, stop. Before you try to do it fast, let's walk. Brian does this great analogy where he was teaching his daughter to drive. He said, I didn't tell her how to start the car and then mash the gas to the floor, right? Because go faster and you'll do better. No, it's not how it works, right? Get the concepts, the foundational concepts in place of finding good candidates, knowing when to buy them, how to manage the trade itself and the risk to your portfolio, and then apply those lessons across the different disciplines. That's the key for success. And so, again, I fall back on that. If you already have some of those skill sets, well, then, okay, march on, right? And best of luck to you. We have other things that we can help you with: swing trading, day trading, option trading, right? So, we want to be here to help. And what I found as a coach in these 15 years is a lot of people just need to lock down. Even sometimes they know what they know, but they don't know the whys, right? And sometimes the whys can be really helpful in understanding how you need to adjust for those different disciplines.
Yes, and sometimes when to use that analogy a little bit more, like if you're struggling, not just learning it from the beginning, if you're struggling, the answer isn't to go faster too. It's you say, all right, well, let me regroup, let me slow down, and learn to do what Todd was just describing: buy and sell stocks the right way. And then if you did want to then speed up later on, you could. Now, Todd, I don't know if you saw Harry's question here. We talk about this comes up often, and I know with 401ks, it's a big topic, right? It's Hyde is saying, well, what about value versus growth? How will we use growth or value stocks in this type of a market? What do you teach me to do in this course?
The answer is yes. So the first thing that we do in this course is we clarify our objectives, right? Because the candidate stocks that I'm going to pursue, if I'm here as a conservative income investor, would be different than I would if I was going to be a growth investor. Understanding the differences, right, will color how I use the VectorVest analysis and research data to build my system. Now, you may have, once you kind of get the basics under your belt, you may have an aggressive growth trading system and you may have a conservative income system that are trading by slightly different rules. But the key is, once you've established the set of rules, applying those rules to that system consistently. We call it staying in your lane, right? So sometimes it's helpful to illustrate the mistake to clarify the objective. So in other words, if you took the successful investor trading rules, which is a prudent to conservative position trading approach, and tried to apply them to a swing trading methodology, it would blow up. That doesn't mean we can't and don't train you how to swing trade. It's just you have to recognize what your objective is for this particular portfolio and have a rule set that's consistent with those objectives. Well, before you get all freaked out that sounds complicated, that I have multiple systems, let's get one, right? Envisioning that I might have several approaches becomes a lot easier and less anxiety inducing when you have one system that you can do consistently and it works, and now thinking about splitting off a little bit to try swing trading isn't such a big anxiety producing uh, concept, right? It all comes back to where are you now? What can you do consistently? And if it's anything south of what we're offering here, then I think this is a no brainer. We'll get you back to basics, get you squared away so that you're now in a position to grow from here.
All right, so just a quick reminder, vectorvest.com/TSIC. Some people say, what does that mean? It stands for the Successful Investor Course. So we didn't want you to spell out that whole thing, so we just said TSIC. All right. And yeah, hide the size of the portfolio. We'll talk about that in Module 5. We'll talk about sizes of the portfolio. So we got you covered in that. So that'll be Module 5. And oh, cool. Carol, you said, I'm in. I got it to work. Woo. This is me wiping my brow. So that's great to hear, Carol. I'm glad you were able to get in. And JC, you're saying it looks like I'm already part of the coaching group. It all depends, JC. Sometimes if you're on a trial to VectorVest, it might show that you're a member of the coaching group. Or, if you're a full subscriber, because I don't have access to your account. If you're a full subscriber and you have access to the coaching group, we do tell our coaching clients that if they've never taken the course before, it is beneficial to take it. That way you have a nice solid foundation of what we're coaching you on every Thursday. Even though you can start to piece things together week by week. But it could be well worth it for you, JC, to spend the $245, get the the basics. And I hate to say basics because we teach the basics in a quick start course. This one takes the basics and really fills in. I think of an English muffin. You ever have the nooks and crannies? You remember those commercials for English muffins? All the nooks and crannies. It's like you put butter on the English muffin and it fills in all the nooks and crannies. And that's what we do with the full course is we realized that there were some things we could have gone into more detail on in the quick start course, and we started to fill in the detail in the full course and expand on it a little bit more. All right, JC. So I think it'd be worth it for you if you've never taken it before. Okay. All right. So Carol's like, LOL. I am glad that you got back in. And Rick says, my order went through too. Awesome. I don't know what was causing it not to go through. That was weird. For a couple of you not to be able to get in. All right. Well, Lori's like, not me. Well, Lori, we're going to get it fixed. So you and I are going to work together. I'm glad you have a positive attitude still, right? You're like, LOL. So I look forward to your email. We'll get this figured out and see what's going on. All right. So everybody, I always say this when we're done with a webinar like this. If our paths cross during this course, great. Like that'd be fantastic. I think that'd be an ideal situation for us to work together and turn things around for your portfolio. Because we never know what's going to happen in the next several months in the market with inflation, interest rates, or whatever. You want to be prepared. So if our paths cross now, great. If they pass if our paths cross in the future, great. If they don't pass now in the future, great. We look forward to seeing you then. Whether it be now or later, or if you choose not to take the course, we still wish you the best results possible, right? Because I heard this saying one time, just because one person makes money in the stock market, it doesn't mean you're taking away the money that I could make. So in the grand scheme of things, it'd be better if we're all successful, right? It'd be better if you're successful, I'm successful, Todd's successful, if we're all making money in the market. And I hope that for you in the future, whether you take this course or not, and create a better life for yourself and your family. And I look forward to having you in the class. And if you're in the class, we'll see you July 20th for the first live session. If not, I hope you have a great weekend. And we'll talk to you again soon, maybe at the next webinar. All right. Take care, everybody. We'll see you soon. Bye.